There's like quite a bit of lost people. I don't know if that maybe that's not the best like way to describe them, but they have these expectations of what LP investing is, and it's just not that. And despite not having a deep understanding of what they're doing, they're deploying millions of dollars a year. Um, on the flip side, you have people that I think are investing that shouldn't be investing.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Aleksey Chernobelskiy. Alexey is the principal of Centrio Capital Partners. He's also developed GPLP Match, where GPs submit investment opportunities and LPs receive deals matching their criteria. Alexey, I was connected to you through LinkedIn, and honestly, I'm just really a huge fan of the content that you put out as it relates to advising LPs or limited partners in syndication. So I'm sure we'll talk a lot about that, but I just want people to, I definitely we'll talk more about making sure people connect with you, but I think your content is a extremely valuable resource to people considering getting into syndication investment. So thank you for coming on the show today. Thanks for taking the time out to be here. I'm super excited to have this conversation.
Yes, I'm here. Thanks again for having me.
Yeah, absolutely. Can we just start with letting people hear your background, a bit about yourself, kind of what brought you to where you are, and then we'll just dive in from there.
Yeah, I mean, I guess it depends on how far back you want to go. The very high level, most important pieces, I guess, is most recently I worked at a public REIT, which stands for Real Estate Investment Trust. I managed a 20-person team, which basically had like two functions. One was managing the existing $10 billion real estate portfolio that we had. And another function was underwriting any new transactions, where we typically bought like somewhere between $1 billion to $2 billion a year. That was like a really fascinating experience. Could talk about it if you'd like, but after I left, I decided to sort of venture into like the GPLP universe a bit, and the public institutional world is actually quite different than what you would generally see in like the syndication world, let's call it. And so I didn't realize that until I sort of like started looking around, learning a bit about the space. I did not understand like how many dollars are getting deployed into the space every year by people. And long story short, I just realized that, at least in my opinion, the space was not transparent enough, and I didn't see enough people that were bringing transparency to the space. And so I set out on a mission to try to do that. Part of that is education, which is where I write, to 7,000 investors on my Substack. Part of that is giving specific feedback on deals, whether it's existing deals or future deals to LPs, so that they understand what they're getting into or are in. And then most recently, as you said, I launched GPLP Match, which is the first iteration of hopefully helping LPs in many different ways.
Yeah, I definitely do want to actually talk about your time working within a REIT, because I think it'll be really interesting to get sort of that contrast, which you spoke about a little bit or alluded to. But I think before we hit record, I told you I didn't really understand why there hadn't been anything like GPLP Match prior to you putting it out there. And then I think you just answered that question for me, in that there's a lot of transparency missing, and maybe that's on purpose. So I think that it's a very needed space, a very needed tool for people to be able to use. But let's save that for a minute. Let's start with maybe kind of a little bit of comparison between kind of that REIT world versus private syndication, and where you saw differences, and kind of your take on that, because I think that's a very unique perspective.
Sure. There's actually differences. There's a ton of differences, Jason. It just depends on sort of like what factor you want to focus on, but I'll just give you a few. First of all, cost of capital is different. In other words, when you're buying a piece of real estate and you're a syndicator or you're an LP in a syndication, the cost of your debt is relatively high compared to that of a REIT. A REIT can usually get money through several different channels. Some of that is like a revolver, which is, almost like a credit card, so to speak, with like obviously a big institution. Even that interest rate is usually much cheaper than what like a typical middle market GP would get. You can also issue shares, which is called like an ATM transaction, which is basically like issuing new equity in the public markets. You can get secured debt, unsecured debt. There's like all these pockets of capital for public REITs that are generally, mostly all of them are actually cheaper than what an average like middle market GP would have. And so because of that, it's actually in some sense easier to get deals to pencil, right? Because if your cost of borrowing is lower, like it's easier to get the returns to work in order to buy something. Of course, the criteria are quite different between a public REIT in terms of like the dollars that they need to deploy, the strategy, whatever, which is how the middle market or lower middle market GP finds opportunity, because it's an inefficient market, which is good. So that's one, just as an example. Another one is just like the flow of deal flow that we had. Because we were sitting on, I don't know, like somewhere between 2 to 5 billion of liquidity, depending on how you count it. Like, we could like press a button and wire like 100 million on a deal. And so like there's no, by the way, I wasn't the one pressing the button, I was underwriting. Right, but I'm just saying like the CFO, to be clear, like it wasn't my company. But I'm just saying like, when you have access to that type of capital, what happens is people come to you because they know like you don't need to syndicate, right? Like there's no condition. Like after you go to investment committee and something is approved, the only reason why you would back out is like you find something in closing. It's not because you couldn't find the equity for the deal, right? Yeah. Not only that, but we actually in the vast majority of cases closed in all cash, and there was no debt contingencies or anything like that. And so the deal flow from broker channels and other channels, referrals and things like that, like really, peaks in a sense, because they know that you perform, you can put big dollars out in like a very short order, and that there's less conditions in people's heads, right? So that's another big difference. And I think related to that, because of that, we saw a lot of deals. Like I managed a 20-person team. On an average week, I would say we probably saw, like the company as a whole probably looked through like well over 100 deals in a week. Out of those 100 deals, our team, i.e. underwriting, probably was actively looking at 10 on an average week, sometimes less, sometimes a lot more. Like sometimes we had like probably 20 in the shop at the same time. But like the fascinating experience out of that was just like you basically had like endless pockets, so to speak, right? But you had to be very careful how you deployed it, because you better be right and you better not mess up the underwriting, because then you have to answer up to investors. In our case, we had like all types of stakeholders, right? Beyond just equity. And so that was a really fascinating experience. Like you see a ton of deals, and within minutes sometimes you have to size up a deal and be like, no, pass, right? And you have to always balance that with realizing that every deal has its complexities, right? And so I think I'll tell you just to compare it to like the LP world. Many LPs will call me and say, it's crazy. I just got this deck and I can't believe it. Like absurd. Like these guys are fraudsters. They have like a 50% split. How could that be? And my first response is like, they can have whatever split they want to have. If you don't want to invest, just don't invest. Like, if you don't like it, pass, right? That's number one. But number two, you haven't given me enough information. Meaning, what if I told you that 50% split was above a 15% pref, for example? And maybe there was a 50% co-invest too. And then all of a sudden you're like, oh, okay, yeah, that's not what I meant. Like, I didn't look at those details yet. Okay, so my point is like, you learn to quickly look through deals, but at the same time appreciate the complexity of every single deal, in the sense that like you can't just discard stuff based on like very simplistic things.
Yeah. Yeah, I'm sure that the scrutiny of the underwriting is much, much higher in the REIT world than it would be in, sort of private syndication. It's really I mean, all those things make total sense, but also maybe not things that I had ever known or thought through, just in terms of, the cost of capital is a huge thing. I guess I've invested in REITs, and I know that the returns that I have gotten as an investor there versus returns that have come from private syndication. How do you feel about the differences there? I mean, I'd see typically the returns are lower on a REIT, but also maybe less risk. I don't know. What's your thoughts on comparing them from the LP side, or as an investor in either type of deal?
Sure. So I have a whole article comparing the two, but I mean, I will briefly mention a few things. So I think the biggest difference is like you're just investing into different things, right? When you're investing in a REIT, you're investing in a company that went through, in the vast majority of cases, like, does fraud occur in the public markets? Of course, right? But in the 99% of times, 0.9 probably, like, a public company has to go through so much scrutiny to the point that, like, you're pretty certain that it's not a fraud. And, like, you're not worried about, like, basic things such as, are the financials correct, right? Having said that, you actually don't know what they are investing in, right? Like you're buying into a company, a share, right? And you're basically trusting the management team to do a good job, right? Generally, they do a good job, but not always, right? And so you don't have visibility into what they're buying. Generally speaking, like, you can listen to earnings calls, you can kind of figure it out from different software, but like, it's usually not so clear, right? And I think that's a big difference, Jason, is like, if an LP wants to get really involved and like they want to see the building that they're investing in, see all the details about the building, see the capital stack, see the returns, see the model, the only way to do that is a private placement, like through a syndication. Now, what I always tell people is that's way more complicated. If you don't have time, I don't think syndications are for you, right? And then if you're just trying to get real estate exposure without much work, then I would say, like some REIT index would probably be a lot better, right? Because you don't have to worry about, like, is this like an honest person? Do I need to do, a background check on this GP? Do the returns make sense? Did they make a mistake in the model? Maybe, you know what I'm saying? Like, this is just it's like it's two related but very different products, and I think an LP needs to understand both to some degree, and definitely not enter the syndication universe unless they have some time, because it's not easy. I think that would be the biggest thing I would mention. And just quickly, in case it's helpful for people, I think people compare dividends of a REIT to pref of a syndication, and I just don't think that's like a valid comparison. So I'll just touch on that really fast. Yeah. Many times they'll see like a REIT and it'll say, oh, like the dividend yield is 4%, But and by the way, some syndicators will actually use this to pitch their stuff, and I think it's like, I mean, I wonder half the time whether they understand what they're saying, because what they'll say is like, well, our pref is 2 times what you can get in the public markets, and of course, like I hope any like somewhat sophisticated person will know that that's not really true. The pref is not like by a REIT, they are forced to give a percent of what's called AFFO, which is like adjusted funds from operations, in case that means anything to people. It's like cash flow, basically, in a sense. And they're forced to give a portion of that out to investors. They don't have a choice, right? And whereas by a syndication, and by the way, that AFFO is coming from, in our case, it was like almost 3,000 properties. One property like has an issue, you won't see any difference, literally zero difference, right? Whereas a syndication, like we had a hiccup, we expected occupancy to be 90%, but we got in there and it was really 70. Oops. Well, guess what? Like your pref is not current. It's going to get accrued, but it might take you a year to get it all of a sudden, right? So like, I want to make sure that people understand that these things are like not entirely comparable. The reason why you invest in a stock is the dividend and also appreciation, right? And just because someone promises you 8% or 10% or whatever, it doesn't mean that it's current. Like it doesn't mean you're going to get it next month.
Yeah. I think that's sometimes glossed over, is that preferred returns are not guaranteed returns. It just means you reach, you as an investor will get that amount of return before the GP shares in the profits beyond it. So, but yeah, no guarantee that it's coming. And the publicly traded REITs are mandated to give off some. How does that dividend percentage get determined? Is it that may be a really complicated math question? I don't know, but is there, because it's not the same for every REIT. So how do they sort of determine what each is going to be?
Yeah, it's literally just a calculation. I could be wrong, but I believe it's 80%. I believe, meaning that they're mandated to give out, I believe 80% from the cash flow that they generate. I'll look it up right now.
Gotcha.
I'm pretty sure.
And so, when did you leave the REIT? How that was?
As of right now, it was I guess crazy to say, but almost 3. It was 3 years ago. Yeah, it was January of 2022. So time flies.
Well, and so certainly probably an interesting time to come into the syndication world, as we were at a peak right then, and then things dropped off very quickly when rates went up. You said you started GPLP match for transparency.
Yep.
What did you see? Well, first, just tell people about it so they, if people are interested in getting being a part of it as either a GP or an LP, let them know kind of how they can access and what the service will do for them.
Yeah, I guess the simple pitch is GPs need to raise money, LPs like to place money. I speak to both people every day, and they all complain about not meeting each other. So I thought, I don't know, like perhaps there's a way to put them together in an efficient way without making it overly difficult for either side. So I'm essentially creating a network. The way it works is a GP submits a deal. It takes, I don't know, assuming you have a decent handle on what you're buying, which is hopefully true, it takes like 5 minutes. I'm hoping that'll come down as I advance the tech. And once the submission comes through, I wrote a piece of code that basically runs through what is now, as of this morning, it was 950 LPs that all have put in some sort of criteria. So for example, Jason might be a registered user, here's an accredited LP, and he only wants to see industrial buildings in New York. That's all he wants, right? So if the submission that came in an industrial deal, but it happens to be in Phoenix, he's not going to get the notification. right? But his friend who wants to see industrial deals in Phoenix is going to get the email, all right? And so it just literally just goes through like a simple piece of code. Well, I guess it's not so simple, but whatever. It's a piece of code. It sends out any emails to LPs that have matched based on what they put in, and the filtering criteria are pretty broad. In other words, like you could say, I don't want to receive any industrial deals, or I only want to get multifamily deals. I only want to see deals in a certain market. I only want to see deals with a certain co-invest. I only want to see deals with a split to LP of at least 80%. I only want to see a pref of 8%, whatever it is. So there's all these options, and like if LPs want to filter out deals, they can. If they want to see everything, they can see everything, and my code just does the work, basically.
And then is it on them to... Well, I get, yeah. Is it on them to then connect, or does your...
Yeah. So like the email is, it's like almost stupid how simple it is, but that's exactly the point, which is like an LP gets an email and it summarizes the deal. It has a link to the deck, summarizes all the terms relative to their filters that they set as an LP, right? Meaning why the deal passed their filters and they're seeing it, right? And then there's just like here's the submitter's LinkedIn, here's their company name and their website, and here's the email. And like you click the email and say hello, and you just introduce yourself and say, hey, like I saw your deal, thinking about investing. Can you send me X? Can you send me Y? You can say whatever you want. It's meant to be like extremely user friendly and simple to use, and hopefully people feel like it is.
Yeah, I'm shaking my head because I'm just like, why wasn't this already a thing? Like, it's just, it's brilliant in its simplicity, just that it should be something that's kind of available to people. And are you vetting these sponsors? Are you doing anything to advise the LPs? Like, I know you say you talk to both sides daily, but if I were a GP, I wanted to put my deal on there, is there some interview process, or you're just kind of open? It's open and just a matching service.
I would call it open. However, there are two filters in place to sort of let's call it quality control the system. So one filter I already mentioned, which is, if let's say 50% of the LPs require 10 years of experience, and every single submission is coming from someone who has 1 year of experience, so he'll just match, or he or she will just match with less number of people, with only those people that are comfortable seeing deals with someone who has a year of experience, right? So that's one side of the network. From the supply side, which is like the submissions, I have like I think it's a simple form for those, let's call it, that know what they're doing. It gets a little intricate for those that don't really know what they're doing. And that's like, I can't tell you that's not on purpose, right? Like some people are dropping off the form because they're like, well, I don't know what this number is. And my opinion is, if you don't know the number is, you're not ready to raise money, right? Like everything I'm asking, I think should be pretty simple. It should be already in your deck, and like at your fingertips. And some people have started putting in a deck and they're like, oh man, you made me realize I should have added X, Y, and Z, thought about it, and then then they come back in a week or whatever, which is fine. That's fine with me. It's really just a form. Once the form is submitted, Jason and my job is to make sure, I make sure is maybe a strong word, hope to make sure, right? Like, I spend like a minute or something just looking at the form and looking at the deck to make sure that there's no like blatant, like, okay, this is clearly an error. Like, for example, here's a famous one. I ask, like, how many round trip deals have you done, right? And there's like very specific guidance of what that means, and like, don't put in units. Inevitably someone puts in like 10,000, and I'm like, okay, like, I think you misread the question. your deck says 5. Is it supposed to be 5? And they're like, oh yeah, sorry, like it's supposed to be 5. So like when in situations like that, to the extent that I have time, like I'll reach out to the GP and say like, hey, can you update the form? And then it it comes through the code and it goes out to LPs. So I don't see myself as like someone in the seat of like doing due diligence. It's like not what I'm doing at all. In fact, I can't do it legally, right? Otherwise, I'm providing like investment advice. But what I simply do is like, does the form make sense relative to what the deck says, right? Like, is it logical? Like, did they make any mistakes? And if I feel like the answer is no, then it goes out.
That's such a good resource. I do think that's a good point that I guess legally you aren't able to just tell people which is the good one, which one you should stay away from. So that makes a lot of sense. But I think it's actually probably a really good resource even for people that are maybe either haven't been an LP before or have one or two and they want to get access to more and more decks and kind of get a feel for what they're looking at and understanding. I would imagine it's a very good resource for that as well. If you just set sort of wide filters and then decide, okay, what looks good to me and sort of narrow it down over time.
Yeah, I'll tell you, like, I've been wanting to do this for like a year and a half. About like 3 months ago, someone someone just pinged me, I think on Twitter or LinkedIn or something, and they said, hey, like I have like $1 million to $2 million to place in the next like month or two. Can you send me some deals? So I don't know, I was just bored. So I posted it on like LinkedIn and Twitter, and I literally got like over 100 deals. So like my inbox was full of decks, and I told the guy, listen, just to be very clear, like I did not look at any of these decks. If you want me to help you, I can help you, but I'm simply forwarding them, and you can look at them and you can make a decision. And so I sent him literally 100 emails, and he reached out, I think the same night or the next day or something. He was like, wow, like I have never like been able to look at so many deals at the same time.
Yeah.
And it was so valuable because it made me realize like, oh, there's like a lot of stuff out there, and I can make a choice, and I can see like, maybe this acquisition fee really does bother me. Maybe this type of sponsor is not good for me. Maybe experience is more important than I thought. Mm-hmm. And ultimately, I think, I hope it's sort of like, sorry, I hope it empowers the LP to realize, like, for some reason this isn't obvious, but like, no one can, grab your money out of your checkbook, right, or your bank account, and you should be careful distributing it, right? Like, I mean, like it should be obvious, but I'm telling you, just from experience, it's not. Like, people will get their first deal ever, and they're like, oh my gosh, like passive investing, I've always wanted to do it. Like, what a pretty deck. Like, where do I send the check, right? And what I'm hoping this helps with is that problem. I think a big thesis behind GPLP match is like many LPs just don't see enough deals. Like, good deals don't reach LPs that are actually trying to deploy capital. And, hopefully I can be like a small part in solving that.
It's funny that it's just different perspective. It's very interesting because there's a lot of talk in the space that's just been really hard to raise capital over, the last couple of years. And it sounds like it's maybe more of an issue of the right connections for people than it is the challenges to raise capital. And it sounds like there are people that want to deploy capital, and I think in my mind, I would have assumed that people that want to deploy capital have their go-to, sort of resources.
Yeah, they have like
people.
their go-to people. Exactly.
Right.
Yeah, but like, Jason, I mean, I get like several calls a week that are like, hey, I'm in like $1 million exchange. Hey, I just sold my business for 20 million. Where should I put my money? And I can't answer those questions because I'm just like, I'm not a financial advisor. But like
Yeah.
what I tell them is like, well, if you would like to look at LP investments, like you should look at quite a bit of them, right?
Yeah.
Like you should look at a lot. And again, and this is coming from my days in the institutional world, like if you look at 100 deals and you're forced to say like I have to choose 5, like that is a very useful exercise. And
Yeah.
you know, some GPs might say, this is like a fair pushback on GPLP match is like, well, like those guys are not serious. Like I don't want my deck going out to like 800 people and like, they're just like, they just want to look at my deck and they're not serious investors. It's like, okay, so don't use it. I don't know what to tell you. You know what I mean? It's like,
Yeah. Also, who
I can
cares?
tell you, yeah.
Who
well,
cares if someone sees it?
I think it's funny because I agree with you, but like, I don't know what it is, but some people are like so protective of their stuff. It's like, listen, I can understand like if you're like not under contract on something, you might lose it.
Right.
Then of course you shouldn't submit it. Yeah. Am I asking you to submit like your entire track record and social security number? No, right? No, I'm not. Like, can you get away with like, your management bios as your deck? No, I'm not sending that either, right? Like it has to be substantial enough for me to email whatever it is, 600, 700 people that matched. But, it's been interesting because I've been getting feedback from both sides. And some of the GPs are like, I'm not sure where this is going. And it's like, yeah, I know. I agree, I literally, as of this morning, every day I spent like about an hour, like row by row going through like the registrations to make sure that they're legitimate people. And that's really all I can do, have a herd of people reaching out, making meetings. Yes. So I know it's working slowly. And I think that's all I can do.
I just see so much utility for this. I also think, I guess it's in contrast to what you're saying about people not wanting to send out to people they don't know. But I'm thinking that would almost be a good thing in terms of refinement of my deck, or just thinking about things that maybe you hadn't thought about, like essentially just like improving the process, improving the deal presentation, all of that. I would think that would actually be good feedback to have as a GP, because it's just, if it gets in front of a lot of people, you're going to have that. It's just basically increasing the reps at its most foundational level. I like it. I think it's a great idea.
Yeah, I think that's a healthier view on it, but whatever. I'm not a GP myself, so people are allowed to disagree with me.
Yeah, and like you said, it's the same. Don't do it. That you don't have to do it as an LP. You don't have to invest in a deal. Like there's no.
It costs. Like a bunch of people reach out and they're like, "How much does it cost? Is there a cost?" And I'm like, "Yes, there is. It's $0." If you want me to talk to your legal team for an hour, I actually had someone reach out today, like, "Hey, can you speak to our legal team to make them comfortable?" Absolutely not. I can't. I don't have time for that. Like, if you don't want to do it, don't do it. Like, I don't know. But hopefully one day. I'm cognizant of the fact that like the product is still vague. I don't even have a landing page up. But one day at a time. It's just me doing everything. So like I'm just going as fast as I can.
Yeah. No, it'll be very interesting to kind of watch the growth of that. I think it's a very valuable resource. Well, Alexey, let me switch gears here. I want to ask you the questions I ask each guest. The first one is, the name of the show is Know Your Why. So you got a really interesting and unique background in the space that provide a perspective that a lot of people I don't think have. But what is your why? What's your motivator? What keeps you moving? Towards bigger and bigger successes.
Um, I think the deepest one is my family, uh, and like I'm a religious Jew, so I give uh, a decent amount of charity, and I really enjoy that. I think those two are probably like the closest to home, so to speak, practical reasons, right, behind working. If the question is like, why am I doing what I'm actually doing in particular, I just think there's like quite a bit of lost people. I don't know if maybe that's not the best like way to describe them, but they have these expectations of what LP investing is, and it's just not that. And despite not having a deep understanding of what they're doing, they're deploying millions of dollars a year. On the flip side, you have people that I think are investing that shouldn't be investing. They're like their full retirement of $100,000 into a deal. And I've heard of stories that you wouldn't believe. So what I'm hoping is like I guess you can call it like it's a really grassroots effort in a sense, where I'm hoping to educate people at scale and hope that I hope they make like better investment decisions, are safer with their retirement, and yeah, that's really it, and ultimately close like that transparency gap that I mentioned earlier.
Yeah, I think that's definitely needed in the space. When people hear this and they want to reach out to you, what's the best way?
Yeah, sure. I mean, I'll send you like the bio and whatever if you can include that. Beyond that, it's pretty easy to find me. Like you can just Google my name. I'm pretty active on LinkedIn, pretty active on Twitter, which is now X. And yeah, would love to hear from people. I'm pretty responsive everywhere, email, platforms, whatever. You can reach out wherever I am, and I'll say hello.
Yeah, well, and like I mentioned at the beginning, I was introduced to you via LinkedIn, and I do think the content that you put out there is super valuable, and again, just maintaining transparency. I think you probably say some things that some GPs don't want you to say, but probably it needs to be said, and I think that's really a great resource. Do you have a newsletter?
Yeah, that's the Substack.
Okay.
So it's lplessons.co, which is co. lplessons.co.
Okay. And we'll get all that into the show notes so people can find it. Man, this was great. Thank you so much for coming on the show. Thank you for sharing what you did, and honestly, thank you for continuing to create this resource and create the transparency. Like I said, I think it's a needed resource. I think when people are uninformed and they make some of those maybe not great decisions on their investments, like you just mentioned that you've seen, it taints them and probably makes them feel like investing is a bad idea, which I don't think is really necessarily what the message that you're trying to spread. It's just investing the right way is probably this is a helpful piece for them. So again, thank you for being on the show and all that you shared.
Yeah, my pleasure. Thanks again for having me.
Yeah, absolutely. Folks listening, make sure you do connect with Alexey. Like I said, ton of great content there. And please like, rate, and review the show so we can continue to get more great guests. And as always, thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?